India, amongst emerging markets, has probably the best macro story right now, and probably better than it's ever been in the last decade, right? Current account deficit is less than 1%. Inflation's down to 5% from double digits 18 months ago. The fiscal seems to be on a steady decline. So all that, is quite good.
You invested $1 billion last financial year, $1 billion in the last 3 months of this financial year. Is this momentum going to continue? By the end of this financial year, how much are you going to end up investing?
So look, we're very bottom-up investors, right? If you see, across the board, we're investing in a number of sectors that are in line with this transforming economies, which is financial services, or the growing middle-income population, which reflects consumption, and whether it's consumer goods, healthcare services, agribusinesses, etc. And then we're also looking at strong companies from India which have global potential.
The philosophy going to be more a combination of public and private, or is it going to be more public focused at this point?
Now, last year when you had a run-up in the markets, we had a mix where over half our investments were private or negotiated transactions, but we still did some public transactions where we felt there was value. So in that sense, it will be a combination, and it'll really be a function of bottom-up opportunities.
A lot of people have said that the valuations have gone overboard. What is your thinking? Is it overheated right now, or is there a lot of headroom if you have a 3 to 5 years horizon for investments?
I won't look at just India in isolation. When I look at it, yes, valuations are higher than long-term averages, but not crazily so. And then I think on a bottom-up basis, you've got to look at, what does it mean? Where are we in the investment cycle? Where are we in the corporate earnings cycle? And if you believe that basically we are on that path of recovery, corporate margins are probably the lowest they've been in several years. So if you see a recovery in that, then it's very easy to justify the valuations in some sense.
What can really disrupt the optimism?
We're looking for a continued pace of structural reforms. We've seen some of that in the last year, and we will look to see that continuing.
Have they been enough so far?
Some of the policies on subsidy leakages being curbed through direct benefit transfers, through the Jan Dhan Yojana account and financial inclusion and so on and so forth. That's obviously a step in the right direction, which I think in the long term could be very positive. There's been steps towards transparency in resource allocations, as we've seen in coal and we've seen in the spectrum. That's clearly a positive. GST is an important milestone. I think things that we are waiting to see is a recovery in the investment cycle. The government has recognized that probably they need to initiate that before expecting the private sector to come in. So we are sort of seeing the beginnings of that, and if you look at the indicators, it shows the early signs of a revival in the investment cycle.
Which are these indicators?
If you just look at basically new project implementations, if you look at capital good imports, some of these indicators, if you look, they're beginning to trend up. Still very early days. Government's clearly taking the lead, and you would need to expect to see the private sector follow, whether it's in 12 or 18 months.
How concerned are you about that MAT issue which is going on about the foreign portfolio investors?
I would just say for all investors, including us, what is important is transparency and consistency of policy.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.